Home builders have been riding a wave of buyer demand for over 2 years now. They could ask for just about anything, and they did. They increased the lot premiums and they increased the list prices of their home. Every builder adopted some kind of waitlist process, and many just put their available homes up for auction. We have 5 houses available this month, and 20 people want to buy them. So how much more than list price are you willing to spend? Now, all good things must come to an end, and the rising mortgage rates we've seen this year, along with the surging inflation, has substantially cooled the buyer demand. New mortgage applications are down 20% year over year, and cancellations of existing sales contracts, those for homes that are under construction but not quite ready to move in, it's at the highest rate since the start of the pandemic. Buyers are becoming more cautious, and builder sentiment is dropping like a rock. But what does this mean for the Austin housing market? Well, if you stick around for this video, I'm going to tell you all about it. This chart shows the difference in new homes started versus the number of new homes sold in the first quarter of this year, broken down by county. There is a difference of approximately 2,000 to 3,000 in each of the 3 biggest counties, Williamson, Hayes, and Travis. When you add these all together, that's almost the same number of total new starts in all of Travis County. This chart shows what the difference in the total 5 county areas look like over time. You'll notice there was a big difference in Q2 of 06, and it remained elevated from 2013 to 2018. But none of those previous periods, dating all the way back to 2001, has been anywhere close to the size of the gap that exists today. Now, what this means is builders reacted to the red-hot housing market we experienced over the last 2 years and ramped up their construction. Now, since there's normally 6 to 9 months delay from when the contract is signed to when the house is ready to move into, if someone signed a contract in December of last year, they've watched mortgage rates increase from around 3% to a little less than 6% while their house is being built. That is a huge deal because the math is like this. If you want to keep your mortgage payment the same, for every single percentage point increase in the interest rate, you need to decrease the amount financed by 10%. So, with a 3 percentage point increase, that means you would need to reduce the amount financed by 30%. As an example, a $500,000 loan would need to be reduced to $150,000 to keep the payment the same as it was at the lower rate. Now, if you have enough household income to still qualify for the higher payments, here's what that would look like. To finance the same amount, your payment will increase about 13% for every percentage point increase. So with a 3 percentage point increase, your payment would be about 40% higher. Now, these higher mortgage rates have caused some borrowers to no longer qualify for loans that they were qualified for 6 months ago. Others, who might still qualify for the higher mortgage payments, aren't seeing the urgency to buy because they're beginning to think that that house could depreciate in the coming year. On a national level, the share of sales agreements on existing homes canceled in June was just under 15%, according to a new report from Redfin. That is the highest percentage since early 2020, when the uncertainty of the pandemic caused many home buyers to pause, at least briefly. For comparison, cancellations were about 11% a year ago. Taylor Moore is Redfin's deputy chief economist. He said the slowdown in the housing market competition is giving home buyers room to negotiate, which is one of the reasons more of them are backing out of deals. Now, it wasn't that long ago when buyers waived inspection and appraisal contingencies, but not anymore. These contingencies give buyers more flexibility to call the deal off completely if issues arise at any time during the buying process. Builders say the main reasons they are seeing buyers cancel are 1, they're nervous about a potential recession, 2, they have a problem accepting the higher payments, or 3, they're expecting home prices to decline. Builders are responding by offering incentives. We are seeing a combination of promotional interest rates, cash available at closing to either buy down the interest rate or apply to the closing costs, and discounts on inventory homes. Now, I could go on all day with statistics, but at some point we need to analyze all of this and answer the question everybody wants to know. If you're thinking about buying a house in the Austin area, is now a good time? Well, since you're watching my video, you must have an interest in my opinion, so I'll begin to answer that question by asking another question. What do you think the Austin housing market is going to look like over the next couple of years? Here's an example of what I'm getting at. Samsung already has a factory in North Austin close to Manor, and they recently announced that they were building a new $17 billion plant in Taylor, which is about an hour from downtown Austin. This announcement outlines their plans to invest nearly $200 billion in 11 new facilities in both Austin and Taylor over the next 10 to 15 years. Now, what we experienced over the last 2 years was unprecedented. We had the pandemic and all the lockdowns, which shocked the economy. Now we're dealing with the after effects of all that. But I believe this is temporary. The one thing that has remained consistent in the Austin area, both before the pandemic and during the pandemic, is job creation. That is the foundation of any strong economy. And this announcement from Samsung indicates that trend is likely going to continue. I believe we are in a temporary shift that is going to reestablish home values in the area. They're never going to go back to where they were before, but they're probably not going to stay as elevated as they have been. Take home builders as an example. They have fixed costs, and as a business, they need to make money in order to stay in business. Yes, lumber prices have gone up. And yes, there is a shortage of skilled labor. But I guarantee you, it's not 50 to 70% higher than it was 2 years ago. One of the things these builders have done is increase the lot premiums. In some areas, it can be as high as $200,000 to $300,000. Just an extra charge for the exact same piece of land, and it has no impact on their cost to build the house. They could do that because they had more buyers than available homes. But when buyer demand drops, those lot premiums give them a price lever that they can adjust to attract new buyers. Now, as they do this, the pricing on these new homes will begin to settle, and it will have a trickle-down effect on the pricing on resale homes. I believe we are in a transition period, which probably won't last as long as you think it will, where everybody is trying to figure out what the new true market value is. Home builders are offering incentives, resale sellers are lowering prices, and buyers continue to remain cautious. It's like a standoff. Everybody is trying to figure out if the prices are going to continue to come down or if this is the best they're going to get. Now, the most important thing to remember is that if you're thinking about buying a house, you are not the only one. And when that huge group of buyers collectively decide it's time to go shopping again, you probably will have missed your opportunity for the most ideal pricing and terms. You know, I get emails, texts, and phone calls almost every day from people who are thinking about buying or selling real estate here in the Austin area, and I'd love to help you out too. If you like this video, you should check out this other one that I did. And don't forget to subscribe to my channel and hit that notification bell. All of my contact information is in the video description, so don't be shy. Let's make your real estate dreams come true.